Welcome to another lecture series on LAUTECH Open and Distance Learning Center. This is ACT 202 Financial Accounting 2. I'll be taking you through study session 5, Final Accounts of Manufacturing Firm. There are organizations whose business activities go beyond buying and selling, but also include the production or manufacturing of certain goods. Unlike buying and selling business, production or manufacturing organization requires a preparation of a specialized account to know the cost of goods manufactured, and this is called a manufacturing account. At the end of this study session, you should be able to define manufacturing accounts, define the keywords used in manufacturing accounts, determine the cost elements in manufacturing accounts, and lastly, prepare a manufacturing account. A manufacturing account is a part of the final account that is drawn by a manufacturing entity before drawing the trading and profit and loss accounts, as well as the balance sheet. Since the firm is engaged in the manufacturing or conversion of raw materials to finished goods, they express the monetary value of prime cost and overhead cost to determine the cost of production. The prime cost involve the direct materials, direct labor, as well as direct expense, while the overhead cost involve the indirect materials, indirect labor, as well as indirect expenses. The total of these, that is total of prime cost and the overhead cost, give the production cost. Some keywords in manufacturing accounts. The following are some keywords that are used in manufacturing accounts. We have 1, opening stock, 2, closing stock, cost of conversion, cost of goods sold, cost of production, current assets, and so on and so forth. Now let's take this one after the other. The opening stock. The stock of goods at the beginning of the accounting year is referred to as the opening stock, while the closing stock refers to the stock of goods that is remaining unsold at the end of the accounting year. The cost of conversion. These are expenses that are incurred in the factory, that is for processing raw materials into finished goods, while the cost of goods sold are the difference between the cost of goods available for sale and the cost of goods in stock. The cost of production. This is the cost of goods that are produced, which includes cost of raw materials consumed and all manufacturing expenses. The current assets. These are assets which are likely to be realized within a period of 1 year or during the operating cycle, and they are also called floating assets. The current liabilities. These are liabilities which are likely to be paid within 1 year or during the operating cycle. They are also called short-term liabilities. Direct expenses. These are expenses that are incurred on the goods that are purchased till they are brought into the place of the business. While the indirect expenses are expenses that are other than the direct expenses. These include expenses incurred in connection with general administration, the financial matters, and the selling and distribution of goods. Fictitious assets. Fictitious assets are expenses and losses not yet written off and are shown as assets in the balance sheet. Fixed assets. These are assets that are required for use in the business for a long period. They are also called non-current assets, such as furniture and plants and machineries, etc. Gross profits. This is excess of sales revenue over the cost of goods that are sold. Intangible assets. These are assets that are in the form of rights which cannot be seen or touched, such as goodwill and patents. Net profits. This is the excess of gross profit and other incomes over indirect expenses and losses in the business. Non-current liabilities. These are liabilities that are payable after a long time. They are also called long-term liabilities. Owner's capital. These are interest of owners in the assets of the business. It is also called owner's equity and is equal to the excess of assets over outside liabilities. Scrap. These are waste material which arises. They are waste materials that arise in the course of a manufacturing process. The tangible assets, these are assets which have physical form and can be seen and touched, such as a building and machinery. Work in progress. Work in progress are goods in respect of which some work still remains to be done. They are also called semi-finished goods. Direct materials. These are materials that are used and they form parts of the goods that are produced, such as purchases of direct raw materials and carriage inwards on raw materials, etc. Direct labor, and this is the last. This is the cost of labor that can be easily traced to the production process, excluding supervision and other labor costs that cannot be linked to the actual work on the products. Manufacturing cost. A manufacturing concern purchases raw materials from the market and converts them into finished goods for sale. The accountant should be able to identify the relevant costs to be included in the manufacturing accounts. The cost of goods produced includes two major costs. First is the cost of raw materials consumed, and second is the cost of conversion. Now let's look into these two one after the other. The cost of raw materials consumed. This represents the cost of raw materials that are used in the course of manufacturing, which can be worked out by adjusting the opening and closing stocks of raw materials and the purchases of raw materials. Now to the second one, the cost of conversion. This is also known as factory overhead cost, and it includes all expenses that are incurred in the factory, such as wages that are paid to factory labor, salaries of factory supervisory staff, factory rents and rates, power, fuel, repairs of plants and machinery, depreciation on plants and machinery, and so on and so forth. All these expenses are debited to the manufacturing account, and they are referred to as the cost of conversion. I hope you had a wonderful time listening. Thank you.